Welcome back to the Dividend Diplomats YouTube channel. Lanny, Bert, you know us by now. You know, and it's not Christmas anymore, but we're still rocking the Christmas hats because we're recording this right before the big holiday. Everybody, let's get ready. Let's buckle up. I don't know why this is sitting in the front, so I'm going to adjust that here for a second. Let's go talk about two undervalued tech stocks to buy.
Oh, it's the holidays, guys. We got two stocks. Smash that subscribe button. Give these two guys a nice thumbs up. Let's pump the channel. Let's spread the holiday cheer. Let's spread the holiday dividend investing here, because that's what it's all about. And Bert, you got two stocks. I know you own both of these stocks. In fact, I'm pretty sure you're buying heavily into one. You caught it quite a bit at the bottom,
Yeah.
but now the yield are still sitting at. These are two stocks with yield sitting over 3%, two massive companies, both with over 150 billion in market cap.
So we're recording this with prices as of December 22nd. So what happened on this day? This was getting ready right before Christmas. The S&P 500 crashed down middle of the day, popped right back up towards the end. So to Laney's point, I grabbed one of these companies at the bottom, saw it bring back $2 per share. But when I was building out this watch list of the stocks I want to keep an eye on, especially when times are coming down, I've been on this kick lately where I'm trying as hard as I can not to add new positions to my dividend stock portfolio. So both of these companies I already own, and there are two companies I'd love to continue lowering my cost basis in these positions as the price continue to slide. And one of them I bought earlier in the year. I stopped buying when the price rose. Now it's coming back to a level where I've been buying it before. So I'm very excited to talk to you about that one. And the other stock, I haven't even thought about this one for a long time. So I'm very excited.
It's back, guys. And we run through the Dividend Diplomat Stock Screener. Focus on three metrics. One, that price to earnings ratio less than the S&P 500. Two, that dividend payout ratio, preferably between 40 and 60%. How safe is the dividend? Three, the dividend growth rate. How long and how hard have they been growing that passive income, that dividend income payment to you? And then we look at the dividend yield, the little icing on top, the little cherry, the little sweet chin music after the elbow drop from the turnbuckle. That's what it's all about. Bert, this first stock, it's back on your watch list. I love this stock. And let's hear what you have to say.
I'm shocked you didn't tease it the way you normally tease this one, Lanny. So I'm going to say it before you do. Cisco, ticker symbol CSCO. Yeah, what is going on with Cisco? They are down 25% year to date, 24% over the last 52 weeks. Their yield has soared up over 3% based on this. And they're just getting caught up in a lot of the tech issues that are going on. The tech sector has been getting slammed in 2022. Tech companies are laying off employees. They're trying to downsize after years of rapid growth. They got to slim down to maintain the strong cash flow, the strong balance sheet, all of the great things.
Gotta trim the fat. Gotta trim the fat.
You're absolutely right. So, but Cisco is obviously the major player in the cybersecurity, but they do
Obviously.
so much more. Yeah, obviously. I mean, you know this, Lanny. When a company has Cisco, it's very hard to leave Cisco. They get ingrained into a company. Once you're in, you don't change. The stickiness is there for this company.
Finding a way to bring you back in as soon as you try to leave. And Bert, this stock again down 25%, trading at $47.32. That first metric, that price to earnings ratio right now, analysts expecting $3 and a whopping 55 cents. Look at this price to earnings ratio of 13.33, definitely below the S&P 500 if I was ever able to say so. But Bert, oh man, you got to take this payout ratio because it's right in your sweet spot.
Annual dividend $1.52. Divide that by the 355. That gives you a perfect payout ratio of 42.82%. Again, perfect payout ratio between 40 to 60% because we think that's the perfect blend of paying shareholders the earnings out in the form of dividend.
Oh, it's damn true.
Yeah, it's damn true. All right. Because then the other part of that is reinvesting in the business to keep going in tech sectors. It's extra important to not pay out too high of a percentage of your dividend because you need to keep investing to keep up and keep discovering that new technology and the next best thing to fight off your new young competitors.
Keep fighting, guys, because guess what? That dividend growth, 10 plus years, they hit a dozen. They hit that one threshold, which is solid. They've been increasing the dividend at an average rate of over 6%, beats the long-term inflation rate, and they have obviously plenty of earnings to keep doing it at that rate.
Yeah. So what is their yield? What is their freaking yield, Lanny? So glad that you asked. Their dividend yield is 3.21%. So again, tech companies, legacy tech companies with higher yields over 3%, that's always going to catch your attention. So to summarize, Cisco, 13.33 PE ratio, 42% payout, 6% 5-year dividend growth rate. They've increased that dividend for 10 years, and that yield is now over 3% after a pretty crappy 2022 for Cisco.
So you guys have it. Check out the metrics here on the screen, but let's slide into that second dividend stock that you've been buying this year that you caught pretty much at the bottom, and they've come back a little bit in share price, but the metrics are looking perfect. We're talking Texas Instruments. Ticker symbol is TXN, one of the biggest semiconductor players out there in the industry, again, in the tech type of space here. Obviously, they've got a lot of technology that they sell and distribute over across the world. Great company, 150 billion in market cap. What's going on with Texas Instruments, brother?
Yeah, it's a sector that's been beaten down. I mean, I've just been, for some reason, I went from not having any tech stocks for the longest time. You remember that, Lanny? I always shied away from the tech sector. And here I am in 2022, investing in tech company. I feel like Buffett, just avoiding sectors for the longest time and then finally caving in after all those years. But okay, so what's going on here? Let's look at that price range.
They don't call him Bert Buffett for nothing.
Yeah, the alliteration is perfect. It's almost it makes you wonder. All right. Price earnings ratio. Price 164.70, EPS 927. That's a PE ratio of 17.77. And here's the thing with Texas Instruments. They are never going to be the cheapest dividend stock. They're never going to have the lowest payout ratio. And sometimes that's great. We don't always invest in the cheapest of the stocks. We don't want the lowest PE ratio all the time. We look undervalued compared to the market, and we'll even look at a company's historical standpoint. And that's where Texas Instruments checks the box of the first metric.
Checks the box still, and that dividend payout ratio, they're checking this box. One, because they pay a dividend when you annualize it out every quarter, $4.96 in total for the year. That payout ratio is in the sweet spot, 40 to 60%, just like Cisco was. So TXN has a 53.51% dividend payout ratio right now. Perfect. Plenty of earnings to reinvest and plenty of earnings to grow the dividend.
Yeah, their 5-year dividend growth rate is 17.31%, and they're almost an aristocrat, increasing that dividend for 19 years. Small caveat, dividend increase in 2022 was about 8%, I believe. It was in the mid to high single digit range for sure. I don't remember the exact percent. I'll put the image up here too while we're talking about it. So it's obviously lower than the average, which is a trend that's been part of the times. We talked about in our last video as well, how we saw that pop up with a couple of the companies. The thing though, they're almost a dividend aristocrat. They've increased that dividend for 19 consecutive years. So there aren't too many tech aristocrats out there, and Texas Instruments is one of the next ones up to earn that coveted title.
The coveted title, guys. Now the yield is now over 3%. It's at 3.01%, down 14% this year, down 12% in the last 52 weeks. So if you look at the metrics overall in TXM, 17 to 18 PE ratio, 53% on the payout ratio, 19 plus years of growing the dividend at an average rate of double digits, albeit it may be slower going forward, with the yield over 3%. So what you gonna do, Bert, when these two dividend stocks runs wild on you?
Yeah, I mean, honestly, both of them are looking great. I could easily see myself when the market reopens after the holiday, that first day purchase, just adding one share of Texas Instruments and maybe 3 of Cisco just to change it up. I've been doing Qualcomm a lot recently, and some of them are just switch companies in the sector. Overall, though, 2 great companies. Cisco, just looking at my wife's portfolio, she owns 55 shares of that. And Texas Instruments, we own 16 shares. I always talk about how I'd love to at least get Texas Instruments to 20, only 4 away. So I don't know if I'm going to hit that by the end of the year, but it's a good goal in the short term to get to 20. And then in the medium to longer term, 1 to 25 if it hangs around there. So honestly, I like both companies. I'm going to keep watching both and then keep following. I'm going to continue adding to my positions in each one of these stocks.
Guys, what are you thinking about these two stocks that Bert's featuring here right after Christmas, right before the new year gets rang in hardcore style? Let us know what other stocks you're buying to finishing off this 2022 year, guys. I hope you have enjoyed the holidays so far. What else you got, Bert?
You know, this is the fun of it. It's fun being a part of the community, reading all your comments, getting these investing ideas. We find great stocks because of all of you. So thank you again, everybody, for your support, your great comments. It's been a blast starting this YouTube channel. I don't want to speak for both of us. Let's crush the last few days of 2022 and 2023. Let's go. Let's freaking crush it.
Guys, make sure to subscribe to this channel. Give this video a thumbs up. We're at 15,426 subscribers at the time of this video. We would love to cross that 20,000 threshold here in the earlier parts of 2023. Let's just get this movement going. Let's get everybody to invest, save money, and better their finances. And Bert, you're either with us
Or you're against us.
us. That was Bert and Lanny from the Dividend Diplomats, over and out.